So thank you. The whole point of Startup Showcase is that there's no investments without startups. So that's to start of the day. We thought the investors today needs some startups, some energy, the enthusiasm which young entrepreneurs bring in. So it's always good. So we now kickstart our first panel of the day, and so the first panel of the day is for Next Gen Ventures. The concept of this panel discussion is to have investors who've had experience in family offices in managing family wealth. These are investors who come from a generation of business families, and they've seen this investment ecosystem through some generations, through their parents, through their grandparents, and now they're starting their own investment firms after being born in an entrepreneurial environment. So it's a little bit contrast to first generation entrepreneurs who kickstart everything from themselves. And we want to contrast this to family office wealth managers as well, and which is the point of today's Next Gen Ventures panel. So I would like to introduce Dr. Karl first. He's here with us in Berlin. Dr. Karl is one of the most prominent experts in Germany for everything Asia, for Asian business family offices, for Asian business in general, and he's kind of a stalwart, I would say, also an author. So Dr. Karl, please come on the stage, and we are happy to have you today on stage as well. All right, and then we have other speakers as well joining in online with family office management from real estate and food and beverage industry. And then Miguel will also be here with us again, co-moderating the panel. So if we could switch to Miguel and Rachel and Patricia on screen, please. Okay, if that's, are you waiting for them? Okay, yeah. Maybe we could just do a small, brief introduction about you. Why don't you introduce yourself to our audience here and tell us about your experiences?
Sure, great. Yeah, no, my name is Karl Pilny, as you can see, and I have a pretty diverse and colorful background, but a lot of that stuff is relevant for startups. Starting with my academic track record, because by background I'm a lawyer, and more than that, even I was part of the Max Planck Institute in Munich for international intellectual property law in the Japanese department in the good old days when the Nikkei was hitting 40,000 and when Japan seemed to conquer the world. And that's where I got my PhD from. So as you can tell, technology transfer, innovativeness and all that is for me a very important topic. And after my years at the Max Planck Institute, I moved to Japan. I had a professorship at Kyodai there. And then I became a partner in a multinational law firm. And I was based in Tokyo and Hong Kong. And the good thing was we had 20 offices in Asia and 20 offices worldwide. So I did a lot of high-flying corporate work, cross-border M&A. We represented a lot of Asian blue chips, Samsung, Toyota, Matsushita, Kawasaki. There were not many Chinese companies back then. And that, of course, shaped my view on the world quite dramatically. And that's why many years later I write books and wrote books called The Asian Century or Asia 2030 and so forth, for the simple reason in the 80s and 90s I was every week, I would say, in 2 or 3 different Asian countries. We were handling multi-billion-dollar IPOs and cross-border M&A stuff, but also a lot of startup matters. And after having been active mostly for Asian clients, by the way, in New York, London, Paris, Tokyo, and Hong Kong, I moved to Berlin in the mid-90s. And to be quite open, this is a Chatham House rule thing, I was very disappointed how provincial and inward-looking Berlin was in the 90s. And back then, and I would always be tempted to say, even today, it's the same thing. There were only 2 industries or asset classes which were interesting, namely startups, real estate, and modern art. So this hasn't really changed in the last 25 years. And I became active in all three of them, first with private money. So I invested a lot in startups, but that's 20 years ago. So back then I was quite active. It was the good old times of e-commerce platforms and cloning, a little bit like the Samba Brothers, but on a much smaller scale. But the startup scene was very lively back then and got internationalized. But nowadays, of course, and this is the best proof of that, it's simply 10 times bigger, it's 10 times faster, and the capitalization is mind-blowing. I mean, the ticket size nowadays is very high for a number of reasons, by the way, because what I do a lot is I used to have my own Asian equities fund. I do a lot of public speaking in the finance sector. I advise institutional investors on the global macro story. So I'm sure you know all that. But we simply have too much money and too much liquidity in the system. The central banks are pumping up the monetary system for political reasons, and you guys are profiting from that big time. So are art collectors and old-timer collectors, so modern art and old cars, but also modern cars and old art, plus real estate is a very nice way, not only for money laundering, but also for investing. So let's say we all profit from this mass of liquidity, but to put a little bit of grain of salt into the story, I'm not only happy about that, because it's sometimes diluting the quality. And what I'm driving at is, do we really need, I don't know, the 5th or the 10th food delivery service, which is using, I don't know, e-mountain bikes instead of e-racing bikes, with a pre-money valuation of, I don't know, 100 million and so forth. But I don't want to get into that.
We get into those discussions, Dr. Karl, because if I allow you to speak, I think this goes on the whole day. But thank you so much for sharing your views and introducing yourself. Let's head over to Miguel there. Miguel, we can see you all on screen, and please go ahead.
All right, thank you. Well, thank you for the intro, Karl. I think it's quite relevant because, in fact, what we want to talk about a little bit today is history, right? So maybe as an intro, because I invited our panelists today, I wanna say that when we thought about this, what we really wanted to do is provide a platform for a variety of different voices in the ecosystem. So last year, in the same day, we actually invited a lot of family offices to come and talk to us, to give us their unique perspective on the world of venture. And today, what we want to do is to provide a different, a platform for a different voice, right? So we have next generation investor operators that come from established family businesses with multiple generations of operators. So we distinguish them from first gen, as I call them, who, like these founders that started a company, exited, and then launched a venture fund. I think there's also a lot of insight that can be drawn from investors that come from established families and who grew up in entrepreneurial environments where with companies that have survived multiple waves of technological disruption. So that was the idea for our panel today. I'm very happy that both Rachel in Malaysia and Patricia from Indonesia have come to join us. So I'll pass it along to them. Maybe let's start with Rachel. Could you please tell us a bit about you as an investor, maybe a little bit about your family, whatever you can share, and tell us really about your focus areas as an investor.
Hi guys. I hope hello from Malaysia. I hope you guys can hear me well. I've had 15 years of working experience investing. My prior experience was mostly in public equities. There's a little bit of venture debt that emerging market debt that I've dabbled in. That was probably the first 10 years of my life. In 2017, I came back to Malaysia to start RHL Ventures with my current partners, which is Jojo Pong and Raja Hamza. So, that's the wrong name. So essentially, what we've been doing in the last 5 years or so is investing in Southeast Asian businesses. with some of our family capital to start with. But I say, right now the capital is mostly institutional. So, the family capital is probably about 10% of what we manage at this point. 90% comes from institutional, sovereign funds, corporates, high net worth investors. So the way we're thinking about it is more, we're more an institutional venture capital as opposed to, just running family capital at this point.
There's a small echo with your voice, Rachel. I'm not sure if it's on our side or it's on. Maybe if you have earphones or something, then probably the audio gets better for us here. But it's not too bad. There's some words which get missed. So, but it's okay. All right, then we move on to the next speaker.
Thank you, Rachel. Patricia, could you please tell us a bit about your investing hat and maybe a little bit about the family also?
Sure. Thank you. Happy to be here. So in terms of my investing focus, I've been a private equity investor for probably around like 15 plus years. Most of my background has been in Southeast Asia. So I started my career with Lehman Brothers on the private equity side right after the Asian financial crisis, the first one. So lots of stories to tell on that one. For most of my career, I continue to be in PE and recently have, entered, venture capital for the past few years. A little bit different, from Rachel. I haven't done much kind of on the public equity side. I've learned a lot about entrepreneurialism, from my family, just kind of seeing the family business kind of over the years. Currently, I'm focused mostly on VC in Indonesia.
All right, thank you, Patricia. Since we're already on you, maybe I want to just like dive deeper and ask. So, do you have any particular insights that you can share with us? Coming from, growing up in this entrepreneurial environment that you now bring with you as a venture capitalist, that gives you a unique perspective in terms of looking at founders to invest in or verticals to focus on. Could you please share a bit?
Sure. So, I've never been involved directly in the family business. So my father was involved in the family business. He's second generation. He retired back in the 90s. But I would say that being around the family business environment really gave me a lot of appreciation for, the resilience of, entrepreneurs. And I think especially, recognizing that we're in emerging markets, where things, happen very quickly. There's, always different, cycles with crisis. I think I gained a much deeper appreciation for how, the kind of skill sets and resilience that's needed to not only run a lasting business, but also a business that, can also continue to innovate and to expand over generations.
Thank you. Rachel, anything you can share with us in the same topic?
I think, that this is just in general, right? Most of the family businesses, have ingrained, values. So, the way that we're looking at, companies, for example, I think we're having more long dated, views on an investment. For example, when we look at things, it's not short dated. A lot of investors look at it from a 1 year, 2 year. I think if you've seen your families do business over the last 30, 40 years, you understand that there's business cycles, cyclical, sometimes it's circular. And so, I think we look at it as, we're here to help, we're partners true and true. We're not above, below you, we're partners, right? And so the idea is obviously to be partners from the start of the journey till the end. And obviously, hopefully we exit together with the founders. And you can lean on us the way we can trust you.
Mm-hmm. I understand that we have a lot of Berlin-based founders on site right now. So for any of them that are interested to expand to Asia, particularly in these two markets that you cover, Malaysia, Indonesia, can you share any particular advice or are there any particular technology gaps where, if there's a big pain point not being solved domestically by local entrepreneurs, or anywhere where you think that you could be helpful as an investor and, put them in touch with your network? Any particular advice that you can share, either of you?
we've seen quite a few German startup founders in Malaysia, especially. You know, there's Happy Fresh, there's Flower Chimp. There's a lot of guys, you know, that has came from, you know, the Rocket Internet spin-off. When they came maybe about 5-6 years ago, I'd say most guys are doing pretty well. I think in terms of the gaps, you know, it's very similar gaps as where you would see in any emerging market, right? You know, it's food security. It's, you know, how do we make manufacturing a little bit more efficient? You know, it's delivering basic needs, housing, transportation, food. And so I think, you know, if we're able to target that gap, you know, there's obviously, you know, a lot to do in this part of the world. I say, you know, like in terms of, you know, I always tell people we won't be, you know, spotting the next guys to go to the moon or Jupiter. Because the reality of it is, you know, we're not there yet, right, in terms of, you know, technology. But, you know, there's a lot of innate problems in this part of the world which hasn't been solved. Again, a lot of it is low-hanging fruits. You know, whatever you see in the West, I think a lot of it can be brought over to this part of the world. And if you can tweak it a little bit more to the local cultures, you know, I think there's obviously a good idea there.
Maybe, Carl, you write a lot about the emergence of India and China. Maybe you could share some experiences. What are the macroeconomic factors you think that's leading to the rise of Asia or India and China, especially as you write? And what kind of technologies do you think might be beneficial or disrupting from that part of the world now?
For large investments, clearly the mega trends are very relevant, like demographic development, urbanization, consumer goods, emerging middle class, and so forth. So by definition, consumer goods, anything dealing with impact-related environmental issues is very interesting for potential investors. Personally, I'm very active in the impact investment field. I'm one of the co-founders of the Swiss Impact Investment Association, because I'm also based in Switzerland since more than 15 years. And on a general note, a lot of heirs of respectable SME companies, partly relatives of mine and friends of mine, they are all very interested in that space. So I'm a great believer in thematic investing. So again, consumer good growth of middle class and so forth is fine and well, but I feel an appetite and urge of people, your generation and also my generation, to feel good by doing good. So anything related to the SDG goals and impact investing, green investments, if you wish, green finance, is very interesting. Now, to come back to your question, I think India has a very favorable demographic structure. It still has to catch up a lot in contrast to China and a lot of East Asian countries. The same is true for Malaysia, having a very delicate political situation there. Indonesia, of course, was everybody's darling in the investor world for many, many years because it's not so export-oriented. It has a very strong domestic market, infrastructure, commodities, energy, transport, logistics. All these are interesting topics to invest. And don't get me wrong, you don't need multi-billion-dollar infrastructure investments. You can have a lot of impact as an investor if you go for software-based solutions, logistics, and so forth. So I see a lot of space riding the mega trends, but with less capital. So that's what I personally do as investments. And for these type of investments, I think Malaysia, which has a very strong base for technological manufacturing, if you think about the car industry, spare part industry, proton, and so forth. So I think Malaysia has a very good starting situation to play an important role in e-mobility. And as you all know, everybody nowadays tries to pursue a China plus one strategy, because people and investors don't like to be too dependent on China because of the dependence on political developments. So Southeast Asia, in particular because of the RCEP, the Regional Economic Comprehensive Partnership, because of that, you are looking at a unified Southeast Asian market. You have the 10 ASEAN states plus China, plus Japan, plus Korea. So I think all these are strong incentives to set up in Southeast Asia. And that's what I advocate my clients. I advise a lot of family offices. As I said, I continue to invest my own money in form of club deals, but I advise a lot of family offices in Switzerland and Germany. So I think to have a solid base somewhere in Southeast Asia, given the stable framework, the legal system, the language advantage, plus all the benefits of the RCEP, customs, formalities, and so forth, is a strong argument in favor of investing in Malaysia and Indonesia. And you don't need to be a big company for that. For startups, it's also very attractive.
Over to you, Rachel and Patricia, to share your views as well.
Yeah, maybe I can jump in there just from the Indonesian perspective. I think Indonesia, is a very exciting market just because of the sheer size alone, right? We're like 275 million people, and I think along the themes of investing, right? I feel that we're kind of only just at the beginning, as an emerging market. Even if you're not, impact specific, I think that there is a lot of impact that you can get, just by providing, goods and services, that has been missing. So some of the key themes that's been, quite successful in Indonesia, and I think to continue to be quite good. I think logistics has grown a lot. Agri-tech, anything that has to do with providing better services to MSMEs, and also in terms of the kind of the penetration itself, right? I think a lot of the startups are still kind of in the first and second tier cities, which are like the main cities, but the rest of the country is still quite untapped, and it's I think if you can crack that, that's quite an interesting opportunity. And I think just the last thing on Indonesia, I think to be successful, you need to have the scale, right? Because it is a big country, it's a huge market. So to be a leading player, you need to be able to scale up quite fast.
Patricia, you talk about cracking it, right? And I remember Rachel said earlier that, for foreign founders entering Asia, that you have to tweak it a little bit. I think that's not as easy to do as it is to say, to tweak it and really localize a product. Do either of you have, like any anecdotes you can share about like how to become successful, or maybe red flags, right? Like warnings about what you've seen people do wrong in terms of trying to localize the product that did not really work. Like anything to share, either of you?
Sorry, I was just muting. I'm muting. I think the easiest one is probably Uber and Grab. When Uber came in, they accepted credit cards only. In this part of the world, I'd say like 70% of the populations are banked, especially in Indonesia. And so, the difference with Grab, when they came in, they very quickly understood that problem and they took cash. And it was really as simple as that. One guy only had, credit cards, and they were targeting the higher value customers, which was also not wrong. But the reality of it is, if you want scale, you would target the mass market, especially if you're doing transportation, right? And so it was really as simple as that. They accept the cash. That's probably the best example that we can get in this current market. Then there's a lot of examples where people aren't sensitive to the local cultures. For example, the naming, for example, right? I'm not gonna name names, but then some people have very sensitive or insensitive names for their startups, and I think that connotation with the name is not flattering in this part of the world. So there's a lot of examples, but those are two examples that I can think off my head.
Thank you. Patricia, anything to add to that?
Yeah, I think I think making a good effort in understanding the local markets, I think obviously is key. And having if you're a foreign founder, I think you do bring a lot to the table, right, in terms of other experiences elsewhere, and often have really good execution ability. I think having a good balanced team, right, like in of experience, local team as well, to help you kind of navigate some of the local nuances. I mean, I totally agree with what Rachel said, on some of the models, right? I think it's, I think the market will develop, but it's like they're not gonna change right away for you, right? So you kind of need to meet them halfway too.
Carl has a point here as well.
I have a quick question, if I may ask. I want to make use of the opportunity to have two natives with their respective domestic markets in front of me. Question goes to both of you. How important do you think it is to have good political contacts and or insights in Malaysia and Indonesia in comparison, for example, to China? Because I talked a lot about top-down topics, mega trends, this and that, and of course there's a lot of legal reforms going on and so forth. But as a startup investor, are you really in danger of being affected by, I don't know, some power struggles between Mr. Mahathir and so forth in Malaysia or in Indonesia? Or can you really build a successful business more or less undercover and not being touched by the local political situation?
I'll take that, given that you talked about Mahathir anyway. So the way we look at it, politics is intertwined with everyday life. Whether in Malaysia, in Indonesia, in China, in Berlin, to be fair, government regulations affect policies and therefore affect investments for the future, right? I think if you're talking about long-term policies, the government change or ministerial changes doesn't really matter that much because also civil service is pretty strong as a country. And I'd say that's probably the same as Indonesia. Like the way we're looking at legislative, jurisdictive systems, it's very separated. But at the same time, the way that how much investments go into green policies, for example, how much of it goes into food investments, how much of it goes into digital, that probably changes a little bit with each government changes. So I'll give you an example of what matters with for government. We're working with a food delivery company, a portfolio company, and we're trying to get more people hired. That's number one. So having a government that is young people friendly, employment friendly, obviously makes it a little bit easier for us because essentially, they understand the gig economy. Therefore, then understand the benefits that need to go with the gig economy, which means retirement benefits. Leave, and this is not just Malaysia, right? Because in the US or California, you can see, there's been a lot of contention about, what benefits do gig economy workers, get versus the guys that are full-time employed or classified full-time employed. In Malaysia, you're classified as a full-time employee as long as you're, employed with any sort of employees, right? Whether you're part-time or not. Then, it comes down to, hey, they're a delivery company, they're on their motorbikes. But essentially, we're moving towards the green economy or being a bit more friendly towards the environment. And so now we're lobbying with the government, and I think because we are a little bit more privileged, being one of the pioneers of the venture capital ecosystem in Malaysia. We're able to go directly to the government and say, hey, these are things that we need to do. Which means when we go and lobby for our company to get electric scooters, there's a serious conversation. And right now, electric scooters are considered motorbikes. With motorbikes, you can only be on the road. With e-scooters, where you're going 6 kilometers per hour, and the motorbike going at 60, you really don't want to be on the same road, right? And so then it's like, how do we get, that regulations passed, and therefore, it's safer for our riders to be on, the pathway as opposed to be on the roads. That's one example that, while it's there's a lot of nuances or there's a lot of noise in terms of the government changes, because the government is a little bit more flexible and is a bit younger and policies are not in place, we're able to lobby for that change to happen much quicker than, to be honest, like if you go through, the US, which goes through multiple, senates and congresses to get that passed, right? So I'd say like there's benefits and cost to everything. I'd say it's not the worst, but I think it's an exciting time for emerging markets at this point.
Great. No, thank you so much. Actually, just looking at the time, maybe we do one last question. And I think, Miguel, I want you to also answer this question, being from the Philippines. So I just start here with Carl, and then we move over to the panelists as well, joining from Indonesia, Malaysia. And now, Miguel, you're on the other side, so you're a panelist, and you answer this question as well. So just in terms of cross-border investments and scalability of startups expanding from Germany to Asia, what would be your one piece of advice that you would give to investors who are looking to invest cross-border in Asia, or startups looking to expand? So we keep it short since we have less time, but all four of you, now we get to answer this question.
You will hit me now. I have one advice: read my books. No, I'm very serious about it. Very serious. No, 15 years ago, I wrote a trilogy called The Asian Century, 3 volumes of 500 pages each. Why do I mention that? Many Europeans and Germans do not realize how diverse and heterogeneous Asia is in cultural strains, political, and so forth and so forth. That means you talk about a dozen, if not 24, of interesting markets and countries and investment locations. So educate yourself before you do anything with Asia about Asia. That's why I write my books, because the differences are enormous. And if you let's just compare India and China. Similar size, similar number of inhabitants, very different culture, very different demographic structure. If you are in consumer goods and so forth, India is, of course, more interesting, and so forth and so forth. And you can break it down to certain sectors and segments and so forth. So please do some homework on Asia as such, and then try to determine whether you feel any fit in terms of culture, market potential, products. Then, of course, you have to do a quick due diligence. What's there? So I would approach this topic step by step, and then finally, when you narrow down the locations, you should have one final look at the investment framework, tax regulations. What I mentioned before, RCEP could be very interesting in terms of customs and innovation subsidies and so forth and so forth. So that's how I would go about it. But Asia is huge. 2/3 of mankind live in Asia. You have 24, 3 of countries. It's huge and vast. So you should really familiarize yourself first before you do anything with Asia.
Thank you so much, Carl. So we move over to Rachel now. Rachel, your last pieces of wisdom for cross-border investments or startups trying to scale from Europe to Asia.
Be open-minded. That's probably, and I think, as everyone pointed out before, do your homework before you come over this part of the world.
All right, Patricia.
I would say also, build your ecosystem, right? Get plugged into the network. If founders who are already there, they're always a great, source of kind of on the ground information, right? I think the opportunities are vast, and I know we've seen different companies that has, pivoted successfully to different business models. So yeah, I think be flexible and tap your network and get your info.
All right, thank you. Last words, Miguel, before we close the panel then.
I would say pay attention to the culture. I guess echoing Carl, right? Most Asian countries have hierarchical cultures, and so that has a big effect on customer acquisition, right? When you think about that organization, you need to be talking to the right person or try to understand the power dynamics in that organization. And also for you as a founder, when you build your Asian team, that has a lot of impact on how you build that Asian team, right? It's not as easy as saying, I'm gonna bring on board like a country manager, a regional manager who's from the region and just assume that that person can just cover the entire region. It's just not that simple. These are all very different, cultures across Southeast Asia as well, different languages, religions, governments. There's a lot to think about. So pay a little bit attention to the history, because that informs the culture of each of these different countries as well.
Great. Thank you so much. Thank you, Rachel, Patricia, and Carl, for joining us. And thank you so much, Miguel, for co-moderating this panel. Thank you so much.
Thank you, everyone.
Thank you.